Is Snowflake stock a buy after Q4 2023 earnings results? I'm going to answer that question in this video after reviewing Snowflake's latest quarterly earnings, the big picture highlights from the earnings. So let's get right into it. Revenue increased by 53% from Q4 the previous year to 589 million. Net loss of 207.5 million worsened from a net loss of 132.15 million year over year. So even though revenue increased, its net loss worsened. So it's losing more money as revenue is increasing. And I have a feeling that management doesn't want you to pay attention to this number. Why do I feel that way? Well, when I was looking through its presentation, it's, roughly 30-page presentation, the net loss figure was in this tiny, tiny print all the way down, all the way at the end of the presentation, tucked away very neatly away so that you're not looking at that figure. Snowflake was highlighting all of these other figures in big, bold fonts, telling you to look at this and look at that and look at this and look at that. Look at our growth here and look at this. But when it comes to the critical figure of the net income or net loss, they have that tucked away all the way at the end in small, tiny print to take your attention away from this figure. Now, as a growth stock, of course they don't want you to pay attention to that. They want to draw your attention to other figures, but I always look for these figures. I always look for the profits and the losses, and I look for the gap figures, the generally accepted accounting principles numbers, right? Because management often wants you to look at adjusted numbers. They take the gap figures and they adjust them where it where it advantages them, and then they try to show you those figures and they try to get you to pay attention to those figures. But I don't look at those, and that's the perspective I'm bringing to you, is to focus on these numbers that management doesn't want you to see. Management wants you to think that everything is rosy and not to look at these figures that really reveal what's going on underneath the company. Okay, so RPO increased to 3.66 billion, up from 2.65 billion year over year. That's really good news. RPO is remaining performance obligations. That means that the company has signed up contracts, customers to purchase products from Snowflake, but the company hasn't used up those products yet. So they account for that as RPO, and when the companies eventually use the products, they will get billed as revenue. There are now 330 customers spending over $1 million on Snowflake. That's up 79% year over year. Dollar-based net revenue retention decreased to 158% from 177% in Q4 last year. This is troubling. This is 4 consecutive quarters of declines in this metric. What dollar-based net retention measures is how much existing customers are spending on Snowflake. So a figure like 158% means that customers are spending $58 more, 58% more this year with Snowflake than they were last year. So they're increasing their spending with Snowflake. So the higher the better. So it's good news that customers are increasing their spending by 158%. The bad news is that this trend is moving downward, and it's 4 consecutive quarters of moving downward. So the rate of growth is decreasing, which is a little bit troubling. Snowflake boasts an NPS score of 72. NPS stands for Net Promoter Score. It I take it as a measure of customer loyalty, as a value, as a measure of the customer value proposition. And out of all of the companies that I follow, Snowflake is among the highest in terms of the NPS score. So customers are finding significant value in purchasing Snowflake's products. That's good news. That's really good news for Snowflake's long term prospects. But I would argue If you sell your products at a price that's so low, you're generating losses on the bottom line, of course your customers are going to be happy. Of course they're going to be happy, right? You're taking something that you should be pricing at $100 and you're selling it for $75, and your customers see that and they say, "Hey, this is great value. I'm happy. I'm very happy. Yes, I'll give you a high score." But it remains to be seen if Snowflake can, when they eventually raise pricing or modify their business or lower their service, somehow decrease what they offer or increase pricing to balance the business in a more sustainable manner to generate profitability, will they still get those same scores? That's a true that would be impressive if they're generating profits and earning a high net promoter score. That's the goal of business, right? To generate profits while pleasing your customers, to balance that. Of course, you can please your customers a lot more if you're willing to accept lower and lower profits, even losses, right? If you take your services and you price them so low that it's just an incredible value for your customers, they're going to be thrilled. They're going to be ecstatic. But is that good for you if you're generating these losses? I don't think so. I don't think so. Snowflake management updated the total addressable market. It feels that it has by 2026 a $248 billion total addressable market. To put that figure into context, I don't believe that's very large. That's I would say, mediocre total addressable market. To put it into context, the total addressable market for coffee is over 400 billion. The total addressable market for hotel and resort spending is upwards of 1.5 trillion. The total addressable market for home improvement spending is 900 billion. The total addressable market for advertising is over 900 billion. So Snowflake's data cloud total addressable market of 248 billion, it's not small, but it's not large. It's somewhere in the middle. If I was giving it a grade, I would give it a B. And then finally, the company is forecasting fiscal year 2024 revenue growth of 40%. So it just completed its fiscal year 2023. I'm always annoyed by this when companies are not on the calendar year. Their fiscal year is different from the calendar year. So even though we're in calendar year 2023, Snowflake is currently in its fiscal year 2024. All right, so it's forecasting revenue growth of 40% in this current calendar year for the rest of us, and then for Snowflake, it's fiscal 2024. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So, to answer the question, is Snowflake stock a buy after these earnings results? And I'm going to say no, it's not a buy. I had already recommended Snowflake stock as not a buy for 2023. If you had watched my video, I told you all that I don't think you should buy Snowflake stock for 2023. So far this year, the stock is down about 5 to 7% as of the start of this recording. So I hope I've saved you some money on this stock for now. And I still don't think that it should be a buy just yet. All right, so thank you for watching this video. I truly appreciate your viewership. And if you like this video, I'm going to link to 2 other videos at the end of this that I think you're really going to enjoy. So please go ahead and click on those, and I'll see you over there.